Hello and welcome. My name's Chris Cann with Mining Journal, and with me I have Marimaca CEO Hayden Locke. Marimaca, of course, is developing its namesake project in Chile and will be soon part of the global copper mix. Hayden, thanks for joining us.
We hope so. Thanks, Chris.
Obviously, we're looking at a DFS coming out in Q4, I think was the last time we talked. That was the expectation. How is that looking at the moment compared to what you scoped in the PEA back in 2020? A bit of time has passed. Any major changes, and what should the market be expecting?
Yeah, there's been quite a few changes. I think the main change is that the resources increased significantly, and so therefore the scale will increase significantly. We've been guiding that we're targeting sort of around the 50,000 tonne of copper cathode per annum production. I would say it'll almost certainly be in that range, 45 to 50. Probably doesn't make sense to go much above that given the change in the fiscal regime in Chile. And certainly the resource is big enough that sub 45 or sub 40 doesn't really make sense for this project. So I'd say somewhere between 40 and 50,000 tonnes. Obviously, there's been quite a lot of inflation, so the capital costs will go up. I still think that the Marimaca oxide project will be industry leading in terms of capital intensity. And so as a result, it's not the biggest project in terms of production, but it'll be industry leading on capital intensity and therefore on an absolute capital basis, which means it's financeable. And then I think probably the biggest change is the copper price. We ran it at $3.15. The copper price is now well north of $4 and has been for quite a while. It touched all-time highs. So the question will be where we're going to run our studies. It's really just to present a snapshot, and I say to the board, it's to present a snapshot so we can compare ourselves to our peers, so people who are providing capital can make a comparison. So somewhere between $4 and $4.10 or $4.15 will probably be our copper price assumption.
Okay, so Marimaca has, obviously, you've got the oxide project at Marimaca. Where does that put you with what you're expecting broadly? I appreciate you're limited in what you can say pre-publication, but where does that put you broadly on what you've guided the market in terms of production in the global copper mix of suppliers? And then can you give us a little bit of colour around what is one possible on the sulfide component of Marimaca, and then if that repeats regionally, and then the regional copper players? As I understand it, there are Marimaca lookalikes regionally along trend, but then you have a little bit of something else up your sleeve. I think it's a Manto style project that's within your holding as well. What does that all look like, and where might that put you in terms of copper supplies going forward in the mid to longer term?
So Marimaca at 50,000 tonnes would be at the small, I say this as my description of the small end of globally significant. It's not a big copper project by any stretch of the imagination. There are many mines that are several 100,000 tonnes a year. And typically if you're looking to be tier one, you want to be 150,000, maybe 200,000 tonnes a year for a significant mine life. And we're not going to be that. But equally, we're not a small project. We are, at $10,000 a tonne copper, we're $500 million a year of revenue. And, that's certainly, I'd say more than half of that will be post-tax free cash. So it'll be a significant cash flow generator. Would certainly be a significant asset for any sort of mid-tier copper mining company, not for a major. You're absolutely right. The exploration potential is significant, and we have been somewhat constrained by our balance sheet and by the success we had at Marimaca and our desire not to lose focus on value for the money that we spend. And so we haven't gone crazy with our exploration programs, but we have continued to explore at an early stage, and we've made some discoveries. The discoveries that are close are complementary to Marimaca, so oxide deposits that feed into the current development plan, and so that's great. It potentially extends our mine life or allows us to increase our scale. You alluded to the sulfide potential. That's the great unanswered question. There's definitely sulfide at depth. There's no way that we can have the deposit we have without having something there, a feeder zone of copper bearing rocks. The big question there is, we've had some success with the drilling. It's quite deep. And so the question I've always had in my mind is, what is the best way for us to spend our money today? Is it to go for the big prize, or is it to try and get us into cash flow and stop the dilution and, kick off what is a really amazing asset on a standalone basis? I think what drives a lot of thinking in terms of exploration is not many companies have a project like Marimaca as their starter project, sitting above what would be the sulfide exploration potential. Most have it's okay, marginal, probably needs something bigger to make it work, or it's in a very challenging location, or it's remote, or it's in the high Andes. And so they're sort of almost forced to go out and look for the big prize, whereas we're not so forced to do that. And so we haven't. We've focused on complementary assets. In terms of regional exploration, I mean, we're about to start exploring. We're about to start drilling. So we've mobilised rigs. They'll be on site this week. And the drill rigs will start drilling several targets. First is Mercedes, which is immediately to the north of Marimaca, shallow oxide target in the vein of the Marimaca oxide deposit. So very complementary. It's only half a kilometre to the north. The second one is Sierra de Medina, which is we're really, really excited about. It's a different scale of opportunity. It's in a belt that is home to now Mantos Blancos, one of the biggest Manto-style deposits, and Cachorro, which is a very large Manto-style deposit. To put it into context, they're sort of 300 and 500 million tonnes at about 1%. So 3 to 5 million tonnes of contained copper. So very, very large, globally significant discoveries. And we control a significant land package, and we're growing that land package. So there'll be some announcements out over the course of the remainder of the year on our exploration efforts in those areas, but we're hopeful that we'll be able to continue to grow as we have done successfully.
It would be a nice distraction, but would success at Sierra de Medina distract investors or the market from that core project at Marimaca? Not that that's potentially a huge concern for you, but as you said, you avoided really doing a lot of exploration because you were worried about diverting attention. Do you see any risk there in terms of also your internal resources and having to follow something up because of market expectations when you really should be working on delivering your core project?
Wasn't necessarily diverting attention from the market as to what we were doing. It was more diverting our finite resources to something that, on a balance of probabilities, had a lower probability of delivering success to our shareholders. The development of Marimaca is very logical and it makes a lot of sense. And there are very few projects with the same return on invested capital metrics that this project has. And so as a result, logically, if it's the top of the pile, I think there's been some analysis done by one of the brokers that shows that Marimaca is the top 2 or 3 development stage projects in the last decade that, in terms of return on invested capital metrics, it makes sense to build that project as quickly as you possibly can. And so that's what we're trying to do. Now that we've got Azor and we've raised a little bit more money and we've got supportive shareholders who want us to go and do exploration, and also most of the drilling now is done. And so Sergio Rivera and Paula Kovacic and the exploration team are, going back to what they do best, which is looking at our exploration. We're starting to go back to focus on that, and we're not doing it in a huge way. We're doing it fairly controlled. The budgets aren't enormous, but we're continuing to explore.
Okay. And you mentioned the project is fairly straightforward because you're focusing on the oxide, your heap leaching. The PEA at least described a fairly straightforward flow sheet for you guys. When you talked about changes potentially coming out in the DFS, it was mainly around the resource, but any kind of nasty surprises when you've done the DFS work around what you might encounter as you get into different parts of the deposit, any changes that you might need to the flow sheet, anything like that you've had to manage?
Nothing around the deposit or the MET has caused us any sort of no concern. We've done a lot of reviews. We've done a lot of infill drilling. We've done a lot of analysis. We've done a lot of MET test work. So we're pretty confident, now that the copper can get into solution and we can make copper cathode. We're pretty confident now that the pit is going to be low strip ratio and it's within the bounds of error. There will be a decent scale resource in there. So we're very happy with that. Where I think the challenges have come is that we're now getting into the fine detail around, okay, well, where are you actually going to put that piece of plant and equipment, and what risks are there to the location that you put it in? And, there's always something that occurs. We've had some things that have caused us to restrict the size of our site layout. It's not major, but it certainly changes the way that you would approach developing the project in a very small manner, and those things add up. But none of it has been anything that has made me think that this project will not be a successful mine, and none of it is anything that's, as you describe it, as a nasty surprise. Everything's kind of continued on in the same vein. We may make some decisions which, as an example, one of the decisions we may make, which is based on a review of all of the met, is we might elect to recover less copper, but use significantly less acid to preserve a much higher operating margin and therefore reduce the size of the project. That's just an economic decision. It's not anything to do with the technical aspects of the project. It's just that there is an economic solution that's the best outcome for our shareholders.
You mentioned a couple of things that have restricted what you've done. Presumably, they're things to do with the local environment and the way that you are required to operate to maintain your social license, or to build a social license at this point. Firstly, what does that social license look like? What's the relationship with the community? We've touched on some of the concerns that people may have in Latin America around industrial action in previous conversations. The market will want to understand those relationships that you have at a local level. And then secondly, the actual paperwork. Investors will remain concerned and anxious about permitting until that key environmental permit is in hand. How's that going?
So we've finished all of the design and engineering, and we're in the final drafting phase for our submission. We've done our first voluntary public consultation, and we're about to do our second voluntary public consultation with our local stakeholder group. There's only one really, which is the town of Mejillones. In terms of the changes to the project, it was driven by our permitting strategy. So basically we identified, okay, what are the key risks that could trip us up? And then we've designed our project to mitigate our impact on those key sensitivities. There's not a huge number of them, but there are, like everywhere, there are sensitivities that we have to take into account. So we think we've done that. And that's part of the reason that we've sort of adjusted and restricted certain areas that we can and can't develop, so that we can say to the authorities, look, we have considered this as a risk, and here is how we have mitigated those risks, and we're taking this seriously, and we're acting as a good sponsor for this project. In terms of the local stakeholders, the first voluntary public consultation was really well received, and we have a website set up, and there's a protocol to go through where they can submit questions. Most of the questions have been about opportunities for employment and opportunities for business partnership, which is to be expected. We continue to have fairly good engagement with the local population. Of course, we've been based in Mejillones as a team for 10 years. That's where we base our geological team. So we're fairly well known. It's not a big population, and you've been there, and so I think it's all going really well. We will continue to engage. We've got one more to go. One of the benefits we have is the political process. The political side of the process is very transparent. So if we go to meet the mayor of Mejillones, as an example, it's publicly registered that we're going to meet, and there's two representatives from our side, and it's really, really good. I like it because it means there's never any suspicion of backdoor dealing or any of those sorts of things that can, create issues when you finally get an approval. People say, well, you did a deal behind closed doors. None of that occurs in Chile. There may be people who want us to change things. There may be people who are against it, but we feel that we're going through the process, and we feel like that is a fairly low risk now.
Hayden, that's all we've got time for. Thanks so much for joining us.
Thanks, Chris.